SoHo House announced this week that it's going private as a company after 4 years of struggling to navigate that delicate dance between maintaining exclusivity and prestige and expanding its global footprint. SoHo House has decided this contradiction is a little too difficult to pull off in the public markets. It's going back to operating as a privately held company. Not a lot of people know what it means to take a company private and why it happens. So let's break it down. So you can think about a take private as the inverse of an IPO. Instead of a company listing its shares to the public in order to raise capital, a buyer, usually a private equity firm or a consortium, which is just a group of investors, decides to buy most or all of the shares of that company by paying a premium to existing shareholders, usually a premium of 20 to 40%, and then they take the company off a public exchange. This allows the company to refocus on long-term value creation instead of quarterly earnings. Plus, there is a huge regulatory and administrative burden associated with being a compliant publicly traded company. Now, these deals typically rely on outside financing. The buyer here is MCR Hotels, the third largest hotel owner and operator in the United States, and the investors backing the deal are Apollo, a leading private equity firm, and Goldman Sachs, putting up a combined total of $845 million. Now, they don't have to worry about activist investors or short sellers, but they do have to eventually deliver a return to these new backers. Going private is not the end of the story for SoHo House, it's just one more chapter, so there are some trade-offs here. They no longer have easy access to the liquidity of public capital markets, and the company is now saddled with an even heavier debt load. But when done right, a take private for the right company can be a win-win-win scenario. Existing shareholders can cash out at a premium, management has more operational flexibility, the buyer, in this case MCR Hotels, has picked up what it deems to be an undervalued asset, the private equity backers have an opportunity to put money to work, and Ashton Kutcher gets a board seat because why not? SoHo House went public in 2021 at the peak of zero interest rate froth and post-COVID demand for IRL experiences. This take private is essentially a bet that SoHo House can turn the business around while it's away from the scrutiny of public markets with more patient capital and fewer distractions. Time will tell if this bet is going to pay off. Follow for more business and finance explainers.